Hello, everyone. My name is Darren Joseph from HTJ.tax, and we're a team of cross-border tax advisors that seek to demystify the sometimes confusing world of international tax. And today we have the honor and the privilege of having an in-depth conversation with Senor Jose Aguilar Shea. Jose, would you like to introduce yourself, please?
Of course. Thanks a lot, Darren, for the opportunity, and obviously happy to chat about the Spanish Texas. So I'm a tax partner in international firm Squire Patton Boggs, based in Spain, in Madrid, Spain, and obviously was very used to working with international private clients, moving to Spain and planning ahead. So I hope we can make a useful conversation to anyone looking to move to Spain or having cross-border issues.
Fantastic. Appreciate it. Many clients intend to retire in Spain, so they may be getting some sort of social security from the U.S. or private pension or public pension. How is that looked upon and treated from a Spanish tax perspective, generally speaking?
Yeah, so the pensions received from a foreign country are generally taxable as employment income. There's a general basis, and without going into detail, we have two separate tax baskets. The first basket is let's say the general income, what it's called, which includes employment income, real estate income, image income, royalty income. And then we have the capital income, which we call the savings base, which is basically dividends, interest, and capital gains. Okay. We don't have a difference between long-term capital gains and short-term capital gains. We did at the time, but currently we don't. So that is, let's say, tax. The first basket, which is the general income, employment income, is taxed from 45 to 50%. Even in some regions, it goes up to 54%. And then the capital income goes from 20 to 28 with the latest changes, which was an increase to 28% in excess of 300,000 of capital income per year. Right. So that's how the baskets are applied.
No, I was led to believe that if someone, while let's say they're back in the US, they were working for the government, and therefore their pension is pursuant to government or state employment, then potentially under the double tax agreement, it'll be taxable in the US, but not taxable in Spain. Am I misunderstanding?
Yes, that is correct, Darren. The tax treaties do provide some special rules on taxation of the origin of pensions. So generally, the pensions are usually only taxable where the residency source, but there are some public specific pensions that could be taxed only at source. So there's no double taxation. And just by curiosity, Darren, just because I think it's a curious point, that as you know, Spain, the southern part of Europe, is an attractive place to retire. So we've had there is a curiosity where, for example, the Spanish-Danish tax treaty provided exclusive taxation right at the residency. So there was an interesting point where there was a bunch of Danish retirement people moving to Spain and France, whereby all the money that didn't pay taxes in Denmark was then being taxed in Spain and in France. So unilaterally, the Danish government canceled the the Denmark tax treaty and the France-Denmark tax treaty because they wanted to change that, and neither Spain or France allowed that. So it's curious, where Denmark and Spain, they have tax treaties with all the European unions, and same for France. The only one we don't have is with Denmark, because there was that situation where the Danish tax treaty is pretty old, and it only provided exclusive taxing rights at the residency country. So Spain was taxing pensions coming from Denmark, which again, Denmark had the right to claim that, well, I gave a tax benefit for all those pensions that were placed privately and didn't pay taxes in Denmark. Now these people are moving to Spain and Italy and France, and they're not paying any taxes in Denmark, and Spain is benefiting from that. So that was the discussion. But as you point out, there are some ways that, because of the tax treaty, could allow exclusion of taxation for certain pensions.
Okay, understood.
So if you're a 6, 7, or 8-figure investor, entrepreneur, or business owner who needs a tailor-made solution from a qualified team of professionals, we can help you achieve the international lifestyle, the freedom, and even the tax savings you're looking for. Visit us at htj.tax and live that international life.